Welcome to today's presentation. My name is Ramon Pram. I'm a director in Equitec's market intelligence team based in New York. I'll be discussing the findings of our knowledge economy, M&A and equity market update for the first half of 2018. In the first half of the year, median deal sizes and valuation multiples rose substantially. However, the number of completed deals dipped by 5% as compared with the first half of 2017. This indicates that buyers were focused on a smaller number of transformational deals for their business, and this is a trend that we are observing in many of our sale processes. Last week I spoke with a corporate development lead, in fact, at a large professional services buyer that previously considered acquisition opportunities below $10 million in revenue on our sale processes. And they've now made it very clear that their focus is on large $20 million revenue plus transactions that move a needle for their organization. And that sort of buyer feedback is becoming increasingly common in our buyer discussions. The major macroeconomic trend that appears to be underpinning the biggest deals, particularly those that are private equity backed, is the impact of future interest rate rises. The current low interest rate environment is coming to an end. Quantitative easing programs are finishing across developed economies. That's putting pressure on many prolific strategic buyers and private equity investors to get deals done this year. With respect to private equity deals, the first half of the year saw some major ones. Equitec was pleased to advise leading Italian management consulting firm Business Integration Partners on their sale to private equity firm Apax, which also acquired Finnish digital consulting business Solita. The Times of India actually reported last year that Apax, along with Cognizant, were shortlisted as acquirers for a buyout of digital consulting firm Liquid Hub. The report also mentioned that there was interest in this asset from Ernst & Young, Accenture and Capgemini. The business was ultimately sold to Capgemini for 400 million euros in February of this year. The deal provided Indian private equity owner Chris Capital with a 4x return on its investment. Another major US deal was Veritas Capital's acquisition of PwC US public sector consulting business. At the end of last year, Reuters had reported that PwC was exploring the sale and that the deal could fetch a valuation of around $500 million, with Madison Dearborn Partners also named as a potential bidder. Over the weekend, it's been reported that this Veritas Capital-backed PwC public sector arm has now been renamed Guidehouse. It's still being led by Scott McIntyre, the former CEO of the business. And its clear service offering is focused around technology and management consulting services to federal agencies across the US. In Europe, there was also some major private equity deals announced. Warburg Pincus Funds acquired Capita's supplier assessment services business. The deal formed part of a broader restructuring of Capita's non-core businesses after it issued a profit warning at the beginning of the year. Capita's followed up that transaction with the sale of its parking management business, Parking Eye, which it sold to Macquarie and funds advised by MML Capital Partners. And together with other disposals throughout the year, Capita expects to raise more than £400 million from non-core divestments, and that's well ahead of its target of £300 million. From a regional perspective, there were large variations in deal activity. North American M&A contracted, particularly in the second quarter, but European M&A notably upticked in the second quarter of the year, despite uncertainties around Brexit and trade tariffs imposed by the US. Cross-border M&A rose slightly to account for almost a quarter of all deals in the period, with most of it being focused on APAC. Interestingly, we are seeing technology buyers from the APAC region being more active on our M&A processes, indicating the importance of international deal flow for these investors. The expected clampdown on the use of foreign labor with work visas to undertake technology projects on site in the West is potentially one factor that's driving this trend. The overall positive buyer sentiment was also reflected in the equity markets. The Equitec Knowledge Economy share price index rose around 6%, outperforming the FTSE 100 and S&P 500. The Equitech Knowledge Economy Share Price Index is made up of indices covering each of our 5 coverage sectors. The Management Consulting Index saw a very steep rise, with robust gains achieved by FTI, CBIZ, and ICF. The IT Services Index experienced an increase with strong performance among a number of listed players. The Media Agencies Index declined, but the share prices of many of the leading Marcoms bounced back from their 2017 falls. The business that bucked this trend was WPP, whose share price continued to decline, with Martin Sorrell resigning as CEO and later founding S4 Capital, the newly founded business that is looking for shareholder approval to raise up to £1 billion for new acquisitions, and most recently acquired Dutch digital agency Media Monks. As we commence the second half of the year, we are optimistic about the strength of M&A activity within the disruption zone of the knowledge economy. It's clear from some of the transformational deals that have already been announced over the last month, including Atos's acquisition of Syntel. We're expecting more deals like this over the next 12 months. If you would like to discuss the findings of our report or your strategic objectives in more detail, please get in touch or follow Equitech Edge, our free source of information, advice, and insights to help business owners prepare for sale and execute effective global sale processes in the knowledge economy.